Folks, I'm back. Hope you can hear me. We had some audio problems. You could hear me, but it was like so. If any of you are still on here, let me know if this is turning out okay. I hate it when I have tech problems here on this end. Sometimes they just come and go, and you don't even know how you fix it. You just restart the program, and voila, everything works. I don't see anybody on yet, but I'll continue to show you what I have. And if it ends up being a terrible video, we will say hasta la vista. So right now, it doesn't look like I have anybody on here. So um, I may not be showing up. Let me see, check my status here on YouTube and see if it shows me on there. It says I'm live now. I've got one viewer. Okay. All right. That one viewer, can you let me know if the sound's okay? What we've got here is a market slowdown that's coming. It's seasonal. It happens every year, but it's slow because it's the holidays, but it's slower than usual because that's just the way the market's been the past few months. And you can take a look here on the Cromford Market Index, and you can see that we're continuing to slide down. Now, the Cromford Market Index is not seasonal, so it doesn't have ups and downs according to the holidays. So you can just see that our market, the measurement between supply and demand, is definitely on a downward trend. And let's see, I got something else here I want to show you. There we go. We have a comment that says you sound okay. Thank you very much. That's good to know. I don't know how I fixed it, but I fixed it. On the Cromford report, the actual index here, you can see that Chandler's 161.7 and down 13%. That's the index is down 30%, not prices. That's just where we're at. Chandler continues to do very well. They've got that new fab coming up. And sound is passable. Let's keep going. Passable. That's a scary word too. I'm gonna have to work on this in the post-production. Our active weekly listing count. You can see I drew a line here that says, well, this is kind of where I think it's going to go. Why? Well, I'm not a projecting wizard. I can just see that it's done that every year. So we can expect that to happen and continue, that our listings are going to come down. And the reason is we're not getting a lot of new listings right now. We don't, as the closer we get to Thanksgiving. Like I said earlier, everybody's at the grocery store. They're not out buying homes. You can see the new listings took a little pop up here about 2 weeks ago, and now they're just leveling off, and our sales are staying there. But if you go back a year ago, you can see that they just fall off the face of the earth the closer we get to Thanksgiving and Christmas, and that's to be expected. There's sales are going to be slower. Now, interest rates did go down. They were about 7.8. Now they're, what are we seeing on here, 7.37. That's not enough to put the gas pedal to the market. That's probably the sales increases that you're seeing, although small, could possibly be people that were already shopping and they were looking at rates that were 7.7, 7.8. All of a sudden they went down to 7.3 and they said, let's do it, in case they pop up again. So I don't think where the rates are now brought any new shoppers out. Just my personal feeling looking at the numbers that I see. Because listings under contract weekly, you can see they've been coming down steadily since week 17, and now we're sitting here at 5,690 and down from 5,733. So they're still coming down. All eyes are on January. I don't expect January to be much better unless something surprises us with rates, and I think rates are going to stay pretty much where they are right now. If you look at our contract ratio, it continues to slide down. I think we went up. No, we're down. We're down here at 39.5, which is considered, we are officially have been in a balanced market. And we're starting to knock on that blue line down here, which says cold market. So again, what's going to happen in January? More of the same. I don't see anything that says interest rates will go down. And I'm going to touch on that in a moment here, just a second. Here's the number of price changes. They're kind of staying level where they were, right around here. The number is actually at 2,049 for the week. So those are price cuts. So they were really high last year. Now they crept up. They're kind of staying the same. So homes are not selling without seller concessions and builder contributions to closing costs and rate buydowns. This is closings over list price in the lower ends of the 250 to 300,000 range. 26% of them are closing over list, 3 to 400 closing over list, but the dollar amount's considerably slower, like 5,000, 6,000. And a lot of that is sometimes if you get in that price range, you do end up with one or two more people wanting to purchase a home too. So you're offering them maybe $5,000 more and then asking them to get, to give you 5,000 back for closing costs. So that's where the market is. This one I like to watch and really keep a close eye on, because back here when supply outstripped demand on the index, that's when we saw prices come down. Right now they haven't touched yet. They're heading towards each other, and that's a very good chart to watch if you want to see where prices are headed. Right now the ratio between new listings coming on and going under contract in the past 2 weeks has gone from 62% to 69%. It's a pretty hefty jump. But again, I go back and say, well, there were people out there that were looking anyway. And as rates started to go down, they said, all right, let's pull the trigger now. So they had intentions in buying in November or December. And when they saw rates come down, they said, all right, let's do it in November. Now, Redfin had an article here and it says, reports pending home sales rise to highest level in a year. That's kind of interesting. Now, this is nationally. The supply crunch has eased slightly. We've seen that. We're up at 16,220, which is the highest Monday we've seen all year, with the exception of last year. I think we got up to, at one point in, I want to say March or April, we got up to 19,000. So we're headed that way. I think we'll be at 20,000 by the time we get to February. If we add at 400 per week, it's going to take a little dip this week. The new listings are not going to come on. Sellers are cutting prices and offering concessions, and there's people that have to move, and mortgage rates fell slightly. So they're explaining what's going on with that. Now, I looked at the CPI data, and I am not, boy, from Budapest, you get around, Betta. That's great. Good to see you. I looked at interest rates, and, when they went down, the industry out there, sometimes my industry drives me absolutely nuts because they all get this same talking points. I don't know if they originate from lenders or from title companies or coaching gurus, but they're all saying, look, rates have come down. Here we go. It's going to be a hot spring. I saw another one that showed this, and this one I really, really don't like. Shows if you were waiting to buy a house in 1979 and you were waiting for rates to go down before you bought, you would have to wait till 1993, 22 years later, for rates to go down. In the meantime, house prices went up. Well, that doesn't say anything about today. Cute little chart. I get it. That doesn't mean that if you sit on your hands now that you're going to have to wait 22 years for rates to come back down again. And if you do, you're going to miss out on a lot of growth. There's too many other variables out there to turn this business into a meme. I don't like it. Don't pay attention to those things. Totally different market back then. Totally different circumstances. We are very similar to the 80s. There's a lot of comparisons. In fact, it's better to compare the business right now to the 80s than it is 2008, because again, there's no comparison to that. We've never had this much debt ever, except for World War II. And we dug out of that. Well, the soldiers came home, production ramped up. We were the only country in the world that had factories that weren't bombed. So naturally, we got all the jobs. And so we dug out of that debt. We don't have that situation now. So it's kind of scary out there. Do I think rates are going to go down? I don't think they're going to go down. They might dip down a little bit in the first quarter. Here's why I say this. When I look at the amount of money that's being spent by the Treasury, the federal government, every time it goes up, a year later, our inflation ticks up. And I have a chart that shows that. Let's see if I can find it here for you, so I'm not just spouting off a bunch of nonsense. But that's going to take me a while to find it, I'm afraid, folks. You can see a direct correlation. Spending went up, inflation went up. Spending went way up, inflation went up, but it was still 6.3%. We had a period there where spending went way down, and I believe it was when the budget talks froze. So they weren't spending at all. And what are we seeing? A year later, now our inflation rate's 3.2%. See, when we don't spend and we don't throw money into the market, inflation comes down. Simple math. It's not too hard. But what I see now is in the third quarter of this year, spending spiked way up again. A year from now, we're going to see inflation, I believe, above 3.2% again. So don't count on a federal rate hike. It's going to muddle like this. So these agents and lenders out there that are saying that this is the beginning, rates are going down, they're guessing. I'm guessing. So don't bank on that. Don't say, well, my agent said, look, agents, we're not economists. We are trained and educated to manage you through the minefield of regulation when purchasing a home, not to be economists. And here we have LB says there's a couple homes in my neighborhood in South Chandler sold quickly, one in a week for full asking price, $638 cash. I wonder if those are out-of-state buyers. A lot of the cash people are. They've cashed out on their house. They've sold their house in another state and come down here, particularly in South Chandler. I'm assuming maybe you're in the Ocotillo area, or are you in Sun Lakes? So the percentage of cash buyers is higher, but that's because the percentage of finance buyers is so much lower. So again, that's another distorted statistic. We aren't seeing more cash buyers. We're just saying that the percentage is bigger. It's not huge. A large percentage of a small number is still a small number. Close to that, yes. I used to live back there. I used to live in Ocotillo. Yes, YouTube, I'm back. Sorry I had that confusion with the sound there. I was hesitant to come back on, but I'm not going to give up. I don't like if something doesn't work for me technically, it drives me nuts, and I keep working on it the rest of the day until I can fix it. So failure, my friends, is not an option. As I look going into the holidays now, we're going to see things just stay pretty much the same and get slower. But there's the chatter on what's going to happen the first year is going to increase. And now you're going to see it's just called prediction season. So you're going to see everybody out there telling you where prices are going to be at the end of 2024 and where interest rates are going to be. And in January, I always like to recap that, say, okay, here's what Zillow said. Here's what happened. But here's where we are in average prices right now. And you can see that we came down significantly last year when we had the shock of interest rates. This is the average of closed sales. A lot of people put their homes on the market and pulled them right off. The iBuyers didn't. They put them on the market and they pushed them until they can get them sold. And that was the majority of these price reductions here that we saw. Then we came back up. We went down a little bit in August. We have since come up again to an average price of $296.64, and today we're at $294. So we've gone down $2. So the market crash that has been preached, that many say that are coming, is yet to appear. I get a lot of people saying, do you watch those guys? I will when they're right, when we finally see something. So there's a lot holding the market up right now. Scary stuff going out there in the financial world, though. So stay tuned to that. Banks are starting to struggle a little bit. I can't make any predictions on where that goes. They always seem to eke something out. There can be really compelling stories that interest rates will go down, and you can make the same argument that they're going to go up. You can do the same thing with real estate. It's highly possible that the central bank, in trying to solve our debt crisis, says, well, I guess we're just going to have to ignore trying to get shelter prices to come down because we've got to save the entire system, and they could reinflate everything, and real estate could once again become the belle of the ball. The last thing I want, though, is a heated up real estate market with bidding wars again. That was not fun. I'd never had a year where I showed so many houses and couldn't get a contract. All you were doing was driving around, hurrying up, writing a contract, sending it out, and finding out that you were number 10 out of 30 offers. So it's not a fun one. Everybody, you realtors made so much money. It was a good year, but man, it was brutal. And especially if you held the listing. I mean, usually when you get an offer, you can look at it, compare it to another offer, look at the terms, sit down, go over it, decide with your client which one's probably the one that's going to stick, and you accept that offer. It's not always price. Sometimes you look and go, will they stick around? Well, can they push this one over the finish line. But when you're getting 30 offers and then they put in these escalation clauses, I will beat your latest offer by $5,000. I'll beat your latest offer by $6,000. You got to literally build a spreadsheet and compare all the two. And the escalation clauses when you're a listing agent are just so difficult. When they both have the same clause in it, you end up calling them going, hey, there's two of you that had the same escalation clause. You want to beat the next offer by 5,000. They want to beat the next offer by 5,000. Can you just give me what your final offer is? And a lot of times they'll say, well, no, I want to beat the other guy. And so you end up going back and forth on the phone with these people and trying to get that sale to go together. And it just, your hair hurts by the time that thing finally goes through. So yay, here's to a balanced market. Balanced market, people can make good decisions on both ends. They can take their time. I mean, we just looked at some new construction here. 6 months ago. We went back. The house was still there. We got in, kind of snuck in under the wire, I think. Got a really decent offer on it. It appraised over value, but we were able to take our time. I remember telling the clients, we can wait the weekend. It's not going to go anywhere. And it didn't. So you make better decisions then. You're not giving anything away. So I want to see this balanced market continue. There is no economic data coming out this week that's going to alter the markets. It's going to get kind of a no news snooze day on Wednesday, so nothing happening there. I do have a video coming out that I hope will come out before Thanksgiving that I want you to watch. And it's on scams to be aware of. 3 scams that I want you to be aware of that kind of amp up the closer you get to the holidays, because that's when we're feeling our most generous. And so when that one shows up, take a look at it. It's not very long. It's only about 7 minutes, but I encourage you to watch that. It's one's related to real estate. The other 2 are not, but I just wanted to make people aware of what's going on out there in the evil world of people that make phone calls trying to get your money. So I hope that helps. If you have any questions, shoot me an email at rick@rickhelps.com. Don't forget to get my weekly newsletter. The link is in the body below. It comes out every morning at 7 o'clock, and you don't have to worry about any issues with my microphone when you look at my newsletter. Hope everybody has a great day. Take on the rest of the week. If I don't talk to you, have a fantastic Thanksgiving. Take care.